Welcome to the live ASX strategy session. Thank you for joining me. Great to have you here. As always, lots of really interesting things to have a look at this week. We've got the ASX 200, the small ordinaries as we usually do. Also, we're going to look at those commodities. We've got gold, copper, oil, which has been interesting over the last few days, and uranium. And I've also got two interesting stocks which are currently in the buy range, in the buy zone. So they're going to be good to have a look at a little bit later on as well. Going to save all the questions to the back end, so we'll keep our flow going as usual. And of course, as always, this is general commentary and doesn't take your personal situation into account. With that said, let's get over to these charts. So we've got the ASX 200 up on the screen, and look, really interesting week. Been a lot less eventful than the previous week where we had this huge rally off the lows. What we've had over the last 5 trading days is we've had a gentle push higher back towards these moving averages, just getting past the 50-day moving average now, and also this resistance region around 7,700. Now, this resistance zone around 7,700 is important because it's where it's basically been the base of that big 6-month trading range that the ASX 200 spent, half of this year trading within. So we're now back testing the under section of that range. That becomes an important resistance point now. And so if there were going to be a pause in this market, this would be a very natural place to get a pause in this upward momentum that we've had off the low, back to the moving averages, back to the resistance point. And that run off the lows, it's been nearly 5%. So really big move. It does look like that the rally is losing a bit of momentum on the in the near term. And so I think that when you combine that with the coming back to the moving averages and the resistance, it really does hint towards the market heading into some consolidation over the next week, 2-3 weeks or so. I think the really big question though is, was this low from a couple of weeks ago, was that a highly significant low or just a short-term one? And I said last week it was too early to say, and it still remains the case. It's too early to say. We need to see how this price action continues to unfold. I think if we do get a pullback, if we do get the pullback I've just been outlining how that could unfold, if we do get that, I want to see what that price structure looks like. The price structure on the decline, I think, would tell us a lot. For instance, would it be a shallow sideways type consolidation? That would be positive because then that starts to set the platform for another advance, and it also shows that the dip would be being supported. There's buying coming in, demand coming into the market. We don't know whether that's going to play out, but that's what I'd be looking for. That's what I'd like to see, to have a bullish scenario in place. But we just got to wait and see what happens from that respect. One thing we can do, we can put the Fibonacci retracements on. So let's just do that from the recent low to the high. And you can see this green shaded area. That would be the sort of your classic proportional pullback should the market come back to that region and then rally. So the sort of price action I'd like to see would be something like, I just sketched something in some sort of shallow sideways, and then from there you start to potentially get the upward momentum. Who knows whether that's how it plays out, but that would be your classic buy the dip structure, which can resolve higher. But look, let's see whether that actually happens. I think as it stands though, as things currently stand, I think the big thing to keep in mind is that we do still have declining moving averages. That hasn't changed. And we still have price action, which is below the moving averages. So from that respect, I think we're still got to respect that there is vulnerability in this price structure. It doesn't mean that we shouldn't look for opportunities, but I think it just just tells us that we need to, like, managing risk is always important, but particularly when you're looking at opportunities, when you've got a market below declining moving averages, there is a pathway we can see which could see this market turn, but it hasn't done so as yet. So I think caution remains the name of the game. I want to jump over quickly and have a look at the equal weight, the ASX 200 equal weight. And this is, when you look at this, let me just compress this a little bit. When you look at this, you've got to say, I think you've got to say the price action is very much still to the downside. The downtrend's intact. It's very much below declining moving averages. And this price action we've had off the low, well, that could lead to a lasting low, but it's very much a could at this stage. At this point in time, the momentum remains to the downside. What's interesting when you look at the equal weight index is that it's valuing each stock equally, so it doesn't rely on the big banks and a couple of the big miners propping the whole index up. You get to see what's happening broad base, what sort of participation there is across the ASX generally, and it still remains weak. Yes, we could get a turning point, but there's just no sign of it yet. I think the risk that we've got to be aware of, and I'm not suggesting this is a risk which is going to happen, but it's the sort of risk we've got to be aware of. It's like just looking back at this period from 2018, where we did get we got a sizable down move, we got a strong rebound back to the moving averages, but then it gave way. It gave way to a further decline. So that's that sting in the tail that you've got to be aware is a possibility. That's why I say, let's look for opportunities, but be aware that this may not be over yet. Hopefully it is, but we don't know. We just don't have enough information to say one way or the other. There's been a lot of talk of gloom, and what was interesting through the week was I had a member tell me that he's been reading lots of articles saying that the markets have changed due to all the information that's so readily available and so many new traders that the market's just different now, and we should be looking at the market in a new way. What was so interesting hearing that is that I've been hearing people say that the markets have changed all my career, going back all the way back to the early 1990s. There's been some reason or another why things have changed, things are different this time, things will never go back to how they were. And, that's, in all my experience, that it's just never been that things have changed and trends have gone and markets haven't returned to upward moves. It's I want to show you, just to give some perspective, just want to show you this. I'm going to call up a chart of the All Ordinaries. I'm going to jump to a weekly to show you this. So this is a weekly chart which I prepared just before we came on, and I want you to look at these boxes along the way up. So these are all what I'd call difficult periods, which lasted for at least 1 year. So going back to, this is far back as my data goes, back to 1982. You see this big multi-year miserable period in the late 80s into the early 90s. Then again in 94, 98, into the early millennium, so 2000 through to around 2003, and so on as you go up, 2010 and 11, 14, 15, and now we've got this current period. This current period doesn't look that dissimilar to all of these previous ones, and all of these previous ones ended and upward trends returned. I don't think this is going to be any different. I don't think this time is different. I don't know when this one's going to end. I don't know whether it's going to fall further over the next period of time, but at some point, I'm confident we're going to be able to put a blue box around it like we have all these other occasions, and we're going to have an upward trend coming from it. So I think that's ultimately where all this goes. So it's important to keep some perspective when we go through these difficult periods. Now, if you're getting some value from this, please hit that like button. Let me know. Let YouTube know that you're watching and you're enjoying it. And if you're watching the replay, leave a comment, because you can't really leave a public comment on the on this one. But if you're watching later on, watching the replay, just leave a comment there. It also just lets me know what you're thinking and that you're enjoying, and that I'm giving you the information that you'd like. Now, I'm going to talk about, in a moment, we're just going to move on and look at the small ordinaries. We're going to look at those commodities, move on to those couple of stocks, which I want to tell you about. But this is where the free version ends. So I do have the free version. The first part of this video is will be publicly available on YouTube. What we're moving into now is the strategy session member section. So if you're not a strategy session member and you're leaving me now, thank you for joining me, but hopefully you're staying on. And if you haven't signed up yet, you'll get a link in the description section below where you can become a strategy session member. Not very expensive. It's just like bringing me a cup of coffee for prepping the session for you. So go and do that if you want to get in the rest of the stuff, which I think you're going to find super interesting. So all my strategy session members,